Chapter number 4, Business Services. Till now we studied about business, and in this chapter we'll study about services. So what is business services? Auxiliaries to trade are known as business services. Service sector include commercial firms engaged in banking or communication, transportation, insurance, and as well as warehousing, etc. That means we get a service for our business. Usually we get a service for our business that is helpful for to run the business in a smooth way. So these will help, that is in the sense it will remove the hardness of a business. It will help to smooth out a business. So these are the other services like telecom services, mail services, and even letter, post, and mobile services. Mobile in the sense communication. So even we have a transportation, and insurance is also a service, and warehousing is also a service which for us. So this chapter we're going to study about business service. So first is features of services. First one is intangibility. You can't see it or you can't smell it, just it can only be felt. Their benefit can be availed. Example like treatment by a doctor. You can see the treatment. Like these are the other examples. Knowledge, brand, goodwill, trademark, patents. These are all intangible. It will be there, but for physical appearance, you can't see the knowledge of physical appearance and even brand and goodwill, like that. Inconsistency. Different customers have different demand and expectation, like mobile service, beauty parlor. Everybody has the different expectation or different demand. So I took an example of a hair parlor. So here some may get a hair, some people may demand for the hair cutting, and some people may demand for hair setting as well as color, much more. It depends. It is not a consistency. It always vary. Inseparability. Production and consumption are performed simultaneously. For example, ATM may replace the clerk, but the presence of customer is must. Here you can't separate the service. There must be a physical existence of or receiver. Inventory less. Service cannot be stored for the future use or performed earlier to be consumed at a later date. You can't use a service at a later date or even early. When you book a flight ticket, you can't postpone or prepone it because the service has exact date. It will happen on that particular date. Involvement. Participation of the consumer in the service delivery is must. So there must be a consumer at the time of the delivery. So if he or she is not participating or there, you can't render service for them. So there must be a customer for not to take a service. This is a difference between a goods and service, basic on which basis they are given service and goods. So this is an important topic. Nature. An activity or a process. Example, watching a movie in a cinema hall is a service. A physical object. Example, video cassette of a movie. That is a goods. Type. Heterogeneous, homogeneous. So service is, you can't expect same service at every time you go to a same parlor or even same services, because every time we may get a different services and everybody get a different services depending on their demands. Homogeneous, it's always same. Intangibility. Example, doctor treatment. You can only feel the doctor treatment. You can't touch it. That's how intangible. Tangible is example, medicine. So you can touch and feel the medicines. Inconsistency. It vary. Different customer having different demand. Mobile services. Different customer in goods. Different customers getting standardized demand fulfilled. Example, mobile phones. So everybody, if you buy a mobile of iPhone X, everybody will get the same iPhone X irrespective of the customers. If you are buying a same. Inseparability. Simultaneous production and the consumption. Example, eating ice cream in a restaurant. You can separate it. Service will be rendered at the time. Separation of product and consumer. Example, purchasing ice cream from a store and eating somewhere else. Anybody can purchase from a store. Inventory cannot be kept in stock. Example, experiencing of train journey. You can't keep or you can postpone it. You can only feel it. Can be kept in a stock. Example, train journey ticket. Ticket can be kept. You can't keep a journey. That is only experience. You have to. Involvement. Participation of consumer is important there at the time of service delivery. Example, self-service in the fast food joint. Involvement at the time of delivery not possible. Example, manufacturing a vehicle. So when vehicle is manufacturing, the customer is need not to be there. Types of services. Business service. It is used by a business enterprises to carry out business activities more smoothly. Example, banking, insurance, transportation, warehousing, communication, etc. Next, social service serves it carry out voluntarily service to achieve social goal, like Clean India is a best example. Personal service are experienced by different customers. These demands upon the customer demand and preferences. Example, tourism, restaurant, etc. That is depend on the customers. Business services have a different category. So it has a 5 category: banking, insurance, communication, warehousing, transportation. These are the 5 category. So in first we'll see about banking. Banking, which mean accepting deposits for the purpose of lending and investing of deposit of money from the public, repay on demand. Banking is a service industry which provide services which accept deposits and lend money to the people who need it. So next is types of bank. We have 4 types of bank. So in that, first one is commercial bank. CB, commercial bank, are governed and regulated by Indian Banking Act 1949, and according to the banking means accepting deposits from public for purpose of lending investment. So there are 2 types of commercial bank. In that we have a 2 category. One is public sector and other one is private sector. For public sector we have an example of SBI, and private sector is HDFC Bank. Cooperative banking, we already learned about the cooperative banking. What is cooperative banking in the last chapter? The banking which provide funds to its member, accepting deposit, the same rule which apply here. And special bank, the third bank is special bank. These banks are formed to specify needs of industry, like export unit. There are foreign exchange bank, industry development bank, import export bank. These are came into action for specified reasons. Central bank of a country control, regulate and supervise the activities of commercial banks. It is known as banker of bank. Functions of commercial bank. First one is accepting deposits. The second one is lending money. Third one is check facility. Fourth one is remitting funds. So that is in the sense money transferring. Fifth one is allied services. Allied services like locker facilities, some other facilities. Next we'll talk about e-banking. E-banking means banking transaction carried out banking services with the help of the computer system. Example, banking over internet is nothing but e-banking example. So next, there are various benefits of e-banking. This is also important topic. E-banking provide 24-hour, 365 days a year service to the customer of the bank. Next is second point. Customer can make some of the permitted transaction from office or a house. They need not to come for the bank for a transaction. Greater customer satisfaction by offering unlimited access to the bank. So we'll get a greater customer satisfaction by e-banking. The bank's e-banking provides some facility for the banking also. That is in the sense it is helping to the bank. First one is e-banking provides competitive advantage to the bank. So with the help of the internet, e-banking, they can reach a goal at faster. E-banking provides unlimited network to the bank. So banker can access at any time. They can maintain a document regarding that unlimited network to the bank. So customer don't need to wait for the longer time. Customer can access at any number of time. That will help that unlimited network access in the bank. Load on branches can be considerably reduced by establishing the centralized database. When every data is centralized, it will bring out the burden of the branch, like data, the worksheet or the database they have maintaining in a book, usually in olden days. Insurance. This is another important topic. Insurance is a contract between two parties whereby one party agrees to undertake the risk and other in exchange for consideration known as premium and promise to pay a fixed sum of money to the other party on happening of uncertain event. Insurer will promise to pay the amount when uncertainty happen for the insured. So insured has to pay some amount in the way of premium. This is a contract between two parties regarding the sharing the risk is nothing but insurance. Functions of insurance: providing certainty. Insurance provides certainty of payment for the risk of loss. However, certainly you will get some amount when risk happen. So that's how providing certainty. There are uncertainties of happening of the time and amount of loss. So for that there will be a certain amount for the risk. Protection. Insurance is to provide protection from probable chance of loss. Insurance cannot stop happening of risk, but it can compensate for the loss assuring out of it. Third point, risk sharing. On the happening of risk event, the loss is shared by all the person exposed to it. The share is obtained from every insured member by the way of premium. It will share the risk of the insured. That's how he has to pay in the way of premium. Insurer will guarantee for the risk. We need to know about the premium. The premium, an insurance premium, is an amount of money that an individual or a business must pay for an insurance policy or for insurance company. Assist in a capital formation. The collected fund of the insurer received by the way of premium, payment made by the insured are invested in various income generated schemes. So it's in the other way, it is a kind of capital formation for the insured. When uncertainty happens, they will get some amount as a return. Principle of insurance. Principles of utmost good faith. The first principle. Insurance contracts are based upon mutual trust and confidence between the insurer and the insured. Insurer and the insured must disclose every material fact and information relating to insurer. Here we have both the parties, that is insurer and insured. They must share the fact between them each other before entering into the contract. Second one, principles of insurable interest. The insurer must have an insurable interest in the subject matter of insurance. Example, life of a property insured. The insured will have incur loss due to the damage. You can only make an insurance for the interest. However, there has to have an interest on insured things. So you can't insure on some other property. That has to bring a loss to you so that you can insure them. Principles of indemnity. Principles of indemnity applies to all contract except the contract of life insurance. So because estimate regarding a loss of life cannot be made, the object of contract of insurance is to compensate to the insured for actual loss he has incurred. These contracts provide security for the loss and not profit can be made out of this contract. You cannot make a profit. The amount of the loss, the insurance company will only pay the exact amount of the loss. It won't work in life insurance because there is no exact loss. Nobody can find exact amount of loss for the life. Principles of proximate causes. The insurance company will compensate for loss incurred by the insured due to reasons mentioned in the policy. You have a goods in the warehouse and you done a fire insurance for that. If flood happen in that area and you lost your goods, the insurance company won't pay you for that loss because it is not a proximate causes or it is not an exact cause which is mentioned in insurance policy. Principles of subrogation. These principles applies to all insurance contract which are contract of indemnity. As per this principle, when the insurance company compensates the insured for the loss of any of his property, then all right related to that property automatically get transferred to the insurance company. So if you claim a insurance against fire, the right on the goods will be automatically transferred to the insurance company. Principles of contribution. If a person has taken more than one insurance policy for the same risk, then all the insurers will contribute the amount of the loss in the proportion to the amount accrued by each of them and compensate for actual amount of loss because he has no right to recover more than the full amount of his actual loss. So you took two policies for the same product with a different company. They only give you the based on the proportion, some proportion like 50-50 or like that, based on that proportion they will give an insurance amount that is not exceeding more than the actual amount. So you can't claim more than actual amount. Principles of mitigation. Insured must take a reasonable step to minimize the loss or damage to the insured property, otherwise the claim from the insurance company may be lost. So you have to take some measures like fire extinguisher or even logos, signs, symbol, and not to minimize the loss. So that will help to minimize the loss. Type of insurance. First one is life insurance, second one is general insurance. In a life insurance, we don't have any category. In a general insurance, we have a category of fire insurance, marine insurance, and other insurance. Okay, next. It's a contract under which the insurer, in consideration of a premium, undertakes to pay a fixed sum of money on the death of the insured on the expiry of specified period of time, whichever is earlier. In the sense, you'll take a policy and the policy will exist for specified period of time or death, whichever is earlier. Okay, next. Type of life insurance policies. There will be 5 types of life insurance policies. In that, first one is whole life policy. Under this policy, the sum incurred is not payable earlier than the death. That means the sum or a compensation will be paid only after the death. The second one, endowment life insurance policy. Under this policy, the insured undertakes to pay the assured to his, has, or nominees a specified sum the attain of a particular age or on his death, whichever is earlier. Okay, next, joint life policy. It involves the insurance of 2 or more lives simultaneously. The policy money is payable on the death of any one life assured, and the assured sum will be payable to the survivor. Annuity policy. This policy is a one under which amount is payable in a monthly, quarterly, half-yearly or annual installment. After the assured attain a certain age, this is useful to those who prefer regular income after a certain age. Next one is children endowment policy. Education of children's or to meet marriage expenses. The insurer agrees to pay assured amount when a child attains certain age. They will get insurance policy amount. This is another policy, fire insurance. Insurance contract that protect the insured against the loss or damage caused by fire during a given period is known as fire insurance. Next one is marine insurance. Marine insurance provides protection against the loss by marine perils, that mean danger, or collision of ship attacked by the enemies, fire and the capture by the pirates, and action of the captain and the crew of the ship. These perils cause damage, destruction or disappearance of a ship and a cargo and non-payment of a freight. This is against all this risk which is mentioned above. That is known as marine insurance. Different types of marine insurance are, first one is ship or hull insurance. That means main body of a ship is called ship or hull. The insurance policy is indemnifying, that means compensation for harm or loss. The insured for the loss caused by a damage to the ship. This is done only for the body of the ship. Next one is cargo insurance. The cargo while being transported by a ship is subject to many risks. These may be a port, risk of a theft, loss of goods, or on voyage. Journey involved traveling by a sea is called a voyage. Thus, an insurance policy can issued to cover against such risk to a cargo. Next one is freight insurance. If the cargo does not reach the destination due to the damage or loss in transit, the shipping company is not paid freight charges. The freight insurance is for reimbursing, that is, repay the loss of freight to the shipping company. It's only for the shipping company who is not paid against a freight charge. Difference between life insurance and marine insurance. This is also an important topic. We'll be discussing on what base the life insurance, fire insurance and marine insurance are differentiated. In that first one, subject matter. Life insurance deal with a human life. Fire insurance deal with a physical property or asset. Marine insurance deal with ship, cargo or freight. The element which exists in life insurance policy is protection and investment. Sometimes it's both. In fire insurance, it's only protection and not element of investment here. In marine insurance, it has only the element of protection. There is no point of investment. Insurable interest must be present at the time of affecting the policy, but need not to be necessary at the time when the claim or fail due. Insurable interest on fire insurance Subject matter must be present both the time of affecting policy as well as when the claim fails due. Insurable interest must be present at the time when claim fails due or at the time of loss only. Duration, it is taken for longer period range from usually 5 to 30 years or whole life. In fire insurance, the fire insurance policy usually does not exceed a year. Policy is for one or period or a voyage or mixed sometime. Indemnity means the amount of loss. Calculating the amount of loss, the sum assured is paid either on happening of certain event or maturity of a policy. In fire insurance policy, the actual amount of a loss from the insurer, the loss due to the fire, is indemnified subject to the maximum limit. So they will only pay up to certain extent, that is the maximum amount which is lost by the fire. The insured can claim the market value of the ship and the cost of the goods destroyed at the sea. Loss measurement. Loss is not measurable here. Loss can be measured in fire insurance. Loss can be measured in marine insurance. Surrendered or value of paid up value. Life insurance policy has a surrender value or paid up value. In fire insurance, does not have any surrender value or paid up value. In marine insurance, does not have any surrender value and paid up value. Policy amount. One can insure for any amount in life insurance. The amount of the policy cannot be more than the value of the subject matter. Marine insurance, the amount of the policy can be the ship of a cargo value. Contingency is a chance when the policy is getting paid. There is an element of certainty here. The event death of a maturity or a policy is bound to happen. It's gonna happen at any certain of time, like either death or as like particular fixed period, whichever is earlier. Therefore, a claim will be present. In fire insurance, the event destruction by a fire may not happen. There is no element of uncertainty and they may not be claimed. In certain cases, if the fire accident has not happened on that fixed period, there may be no claim. The event loss at the sea may not occur and there may be no claim. There is no element of uncertainty. Next is communication service. Communication service are helpful to business, establishing a link with the outside world. Without communication service, no business can't do isolated business. That means separate, like suppliers, consumers, competitors, etc. We have to communicate with those outside of world. Communication service can be classified into two groups, that is postal service and telecom services. Postal service. Indian Post and Telegraph Department provides postal services across India, and the whole country is divided into 22 different circles. Various head post office, sub post office and branch post office managed by day to day. There will be two types of postal services, that is the first one financial facilities and the second one is mailing facility. We'll discuss about financial facility first. These facilities are provided through the post office savings schemes like Public Provident Fund PPF, Kisan Vikas Patra and National Savings Certificate, in addition to normal retail banking function of monthly income schemes, recurring deposit, savings account, monthly order facilities, etc. And the second one is mailing facility. Mailing facility consists of parcel facility, that is transmission of articles from one place to other place. Registration facility to provide security for transmitted security of the transmitted articles, and insurance facility to provide insurance cover for all risk in it. Then postal department also offer allied services, other services, greeting post, media post, international money transfer facility and passport facilities, speed post facilities. E-billing. E-billing is electronic billing or electronic bill payment and presentment in when a company organize a group, send its bill over internet and a customer pay the bill electronically. It's called e-billing. Next is telecom services. World-class telecom services infrastructure is the key to rapid economic and social development of the country. It is a fact, the backbone of every business activity. The various types of telecom services are: first one is cellular mobile phone. These are all types of mobile telecom service, include voice and non-voice message data service utilizing and type of network equipment within this service area. Other services which telecom services is providing: radio paging services. Radio paging service is an affordable means of transmitting to a person even when they are mobile. It is one-way information broadcasting solution and it has spread its reach far and wide. Next is fixed line services. These are all type including voice and non-voice message and data services to establish linkage for long distance traffic, usually internet, landline and all. Cable services, these are linkage and switched services within license area operation to operate a media services with are essentially one-way entertainment related service. The two-way communication include voice, data and information services. And then VSAT service. VSAT is a very small aperture terminal. It is a satellite based communication service. It offers business and government agencies a very highly flexible and reliable communication through both urban and rural. In order to get a good communication in a rural and urban area, we are using a VSAT services. And DTH service is a satellite based communication service provided by a cellular company. One can receive media service directly through a satellite with the help of the small dish antenna and set of box. This is also another service. Next is transportation. We know about transportation. So transportation is usually, it helps to transfer the goods from one place to other place. We already discussed about this topic. Warehousing services. The warehouse was initially sent an static unit for stored product in scientific and systematic way to maintain its original value of a quantity and usefulness. They are used by many manufacturers, importers, exporters, wholesalers, transportation, business, customer, etc. Types of warehouses. First one is private warehouse. Private warehouses are operated, owned by a leased by a company holding their own goods, such as retail chain store or multi-branding product companies usually maintain these private warehouses. Public warehouses. Public warehouses can be used for usage for the storage of goods by traders, manufacturers or any members of the public. After the payment of storage fees or a charge, the government regulates the operation of the warehouse by issuing a license for them to private parties. Bonded warehouse. Bonded warehouse are licensed by a government to accept import goods to payment of tax and custom duty. These are goods which are imported from other countries. Government warehouse. These warehouses are fully owned and managed by government. The government manages them through the organization set up in a public sector. For example, Food Corporation and Central Warehousing Corporation. Cooperative warehouse. Some market cooperative societies or agricultural cooperative societies set up their own warehouse for members of their cooperative society. Functions of warehousing. Consolidation, that means combining. In this function, the warehouse receives the consolidation material or goods from a different production plants and dispatch the same to a particular customer or a single transportation shipping. Like ABC is a manufacturer which bought together for consolidate and it is sent to ABC or even somewhere else. Break the bulk. The warehouse performs the function of dividing the bulk quantity of the goods received from a production plant into small quantities. These small quantities are transported according to the requirement of the client to the places of a business. Stockpiling. The seasonal stock of a goods to select the business goods or raw material which are not required immediately for sale or manufacturing are stored in warehouses. It based on seasonal, so they will store the goods for the seasons or to create a demand. Next one is value added services. Certain value added services also provided by the warehouses such as in transit, mixing, packing and labeling. Next one is price stabilization. By adjusting the supplier of a goods with the demand situation, warehousing performs the functions of stabilizing price. The end. Thank you.